advising clients across the country. Here he is, your host, J. Christopher Boyd.
Welcome back to Something More with Chris Boyd. I'm here with Jeff Perry, and our guest is Doug MacDonald of Murray MacDonald Insurance Services. Doug, great to have you back. Thanks for being with us.
Hey, Chris, thanks for having me. Great to be here.
And we always love having you as a guest because there's so much to be learned about all the issues we, don't always think about with property and casualty. You think of your car, you think of your house, but there's a lot of aspects to think about. And so we got a chance to talk to you about it. This time of year, I'm thinking about boat insurance, and
right. Yes, you are, Chris.
Yeah, we got a boat recently, and of course there's hurricane season is coming up, and we got a lot of things to think about. So, Doug, where should we begin to think about when it comes to this season and all the property and casualty considerations?
Yeah, I would hope most people have taken care of their boat insurance by now.
Probably already, yeah. True.
The one thing I would say to people who own watercrafts is that make sure your watercraft policy gives you replacement cost coverage for partial damage. And a good example is if you are operating your watercraft out there on the sunny day and there's a rock that you hit at low tide and it damages your lower unit. If your boat is 5 years old and if you don't have replacement cost, your lower unit will be depreciated. So it could be a $15,000 repair bill for replacement cost, but then they turn around and depreciate $5,000 off, and then they hit you with a deductible. And a lot of times people don't think about that when they get boat insurance. They just think, I'll get boat insurance. But you want to make sure you can get replacement cost rider on the policy. And I'm always encouraging people about that. So that's the one thing I have to say about watercraft. Yeah.
What about trailers and stuff too? I don't even think about the trailer, but I mean, I know that's also something that has to get registered. Is that something you think much about or don't give much thought to?
The liability component of your trailer follows the automobile that's towing it, unless it's a big, heavy commercial trailer. But if it's your average size boat policy, it's covered under your liability. But if you want physical damage to the trailer, you need to schedule it. And typically your boat policy will enable you to add the trailer on and schedule it for physical damage.
Doug, when I think about boats, and we've had boats, we don't have a boat currently, but we've had boats for decades. I don't think about property damage. I think about liability, right?
Absolutely.
I mean, it's just so much can go so wrong so quick. When not trying to scare you, Chris, but so quick. And so I think about an umbrella policy. We just renewed our homeowners where we are, and it asks if we have a umbrella policy as well, and asked if you owned a boat. So I assume it's not an exclusion to an umbrella policy. And maybe we should go back to the basics. What is an umbrella policy, and why should somebody consider one if they have a boat? How's that?
Sure. Well, an umbrella policy is a coverage that gives you an additional layer of liability and extends over underlying policies, such as your automobile. Your automobile policy may have $250,000 of liability. What happens if you have $1 million lawsuit?
Right.
And so your umbrella policy gives you that extra coverage over the automobile, or if you had a trip and fall at your home, or let's just say you're all playing golf and you hit a golf ball and beam somebody off the head and do a lot of damage to them, physical damage. Your homeowner policy actually extends to that, as would your umbrella. And the same thing works for your watercraft. But you'd want to make sure you declare that. So on the application, it'd say, do you have any watercraft? Yes, I own a watercraft. And you'd also want to declare who the operators of the vessels are. You just can't give anybody permission to use your boat. Typically, you'd want to make sure the underwriters know that, yeah, these are the normal boat operators. And so the umbrella policy will give you extra liability. And while you're on the topic, I'll tell you one of the best things you can do is encourage everybody to wear a life jacket. Today they have very comfortable life preservers. They have those ones that will self-inflate and so forth. But, here on Cape Cod waters, every summer you read about a number of different drownings, and they'll always say, gee, and they didn't have a flotation device. Well, no kidding. You wouldn't be reading about that drowning if they did have one. And I own a boat, and I go out there. I ask people to, wear a life jacket. They're very comfortable. They put them on. But I can't tell you the number of times you're out there and you get a rogue wave, or you just hit something the wrong way, and you can get bounced out. And I remind them that, you may be a good swimmer, but as you're being bounced out of a boat, you may bang your head and you may not be able to swim when you hit the water. So, prevention is good. So you say you start off with a good life preserver that you wear, and have good umbrella coverage for backup.
Yeah, good points. All right. Well, as you said, that may be something that hopefully people have already gotten kind of planned around at this point, as we're into the summer season. But we do start to think about this as coming up on hurricane season. That creates a whole lot of considerations when it comes to wind and some of those kind of issues. We've talked a little bit about it, and maybe you got other things you want to focus on, but that's maybe one that is worth just another minute to review before we jump on to other topics.
Sure. Well, hurricane season's here. Hurricane season runs June through November. And I guess, one of the things that we haven't spoken about in the past, but I want to bring it up to people's attention, is areas of coverage that are not included on your home policy when you think about hurricane. So flood, if you happen to have flooding, that's not covered on your homeowner's policy. I think most people understand that, but they forget about flood exposure. And you think about what happened down in Ian, a lot of those homes that were flooded were inland. In fact, they had if you saw some of the pictures from it, Route 75 was underwater, portions of it, and that was inland quite a bit. A lot of those homes that were inland were flooded, and they had no flood coverage. And so people, you'll hear this a lot. I am not in a flood zone on Cape Cod where they live. And I remind them that everybody is in a flood zone on Cape Cod. If you get 18 inches of rain in a 24-hour period, you're in a flood zone, typically, for a lot of people, right? If you get inundated with water. So you may be in a low risk flood zone, but
you can't have damage and the water coming in the house and problems that can.
Yeah. And then it brings up a couple of other points to think about. Erosion. Erosion is not covered on your homeowner's policy, nor is mudslide or a sinkhole. And sometimes those things tie in, and people don't think about that. They just think, homeowner policy covers me for everything. And so I'm putting it out there as a talking point. Mudslide, sinkhole, erosion, landslide, those are issues that are not covered in your homeowner's policy and can surface during, whether it's an earthquake or hurricane. You can sometimes get some of these other events happening as well.
Well, I think of a mudslide as something you hear about happening in California. Do we have those happening around this area too often?
Fortunately, sinkholes and mudslides and landslides, you don't hear about them, but I'm not going to say they don't happen.
Right.
I know in my neighborhood, my wife and I, we go all running together, and there's in somebody's lawn, we noticed that the part of the lawn
sinkhole possibility.
It caved in, and I was like, wow, okay, that's kind of interesting. But we are not in that type of a zone, but it's one of those areas that,
scary. A sinkhole is kind of scary, don't you think? Possibility of that. Yeah. But I suppose some of these things can happen anywhere. Just a matter of hopefully the probabilities are low. And so when you deal with that kind of thing, a sinkhole, a mudslide, flood, I know, is typically done with a separate policy.
Yeah.
How are these other types of concerns addressed? Are they a
Sure.
rider or are they dealt with as a separate policy of some kind?
Yeah, many homeowner policies will give you a sinkhole rider. They'll add that coverage onto your policy. I know in Florida, where sinkholes are quite common, they mandated that homeowner policies must cover sinkhole coverage. But in Massachusetts, that's not the case. That is a rider. If you were to get something for erosion, which is an exposure here when you have a hurricane, right? You see the houses collapsing into the water.
Right.
Erosion is an exposure, mudslide, landslide. That's something referred to as a difference in condition policy, a DIC. People would buy that as a separate policy. And typically you'd buy that not from your homeowner insurance company, you'd buy it from your agent. They would have to go to the excess and surplus lines market, your Lloyd's of London type insurers that would provide a difference in condition policy to cover those exposures. So you think if you're out in California, where mudslides are an issue, that's what they would need to do to protect that type of an exposure.
Doug, how about earthquakes? I saw in some of the notes you mentioned earthquakes. Are they?
Before you go to that, Jeff,
Sure.
Just before we move on,
Yep.
when it comes to the this other type of policy, would you be selective about who you suggest obtain that erosion and mudslide and so forth? Or would it be like, is it a certain size property that you say, okay, you really should invest in that? Or are you suggesting that anyone on Cape Cod should entertain these kinds of coverages?
I think more importantly, it's just FYI, be aware that these exposures are not covered. And so I typically don't sell sinkhole, landslide, mudslide coverage. I do sell earthquake and flood quite a bit. We really don't have those exposures here, but I do surface the conversation with people and ask them, are you interested? Are you concerned about sinkhole, landslide, or mudslide, that type of an exposure? If you are, there's a separate policy you'd have to get because that's not covered on your insurance policy. But that is a very rare policy that's purchased, a DIC. Earthquake and flood, on the other hand, those are common, and in fact, flood insurance in the private market has made it very affordable for many people to consider.
Meaning outside of the offering that comes from the federal government?
That's right. Yeah, if you're in what we refer to as a lower risk geographic area, you might consider getting a private flood policy. They're relatively affordable. You'd be surprised at how affordable those types of contracts are if you were to buy, a couple $100,000 of coverage to cover you for that type of an exposure.
Okay. And then for people who are in one of those flood zone that the federal government has delineated, they have access through a federal program.
They have access to both the federal program and the private market. The private market, I would say, for a notch below your most hazardous type flood zones.
Okay. And then, Jeff, you started to ask about earthquakes and I interrupted you. Sorry about that.
Yeah, when we were going through the list of all the things that can happen, I did wonder about earthquakes. Are they part of a normal homeowner's policy, or is that separate as well?
Yeah, it's separate. It's not covered on a homeowner's policy on the standard unendorsed homeowner policy. If you wanted earthquake coverage, ballpark, you're going to pay 8 to 9% of a standard homeowner premium. So if your homeowner premium is $1,000, you'd probably pay $80 to $90 a year to cover yourself for earthquake. And sometimes when I mention that, people will chuckle. Earthquake, but we are in an earthquake-prone zone area. Sometimes you'll hear about us having little tremors.
They're on a fault line, right?
Yeah.
Now, is that all of New England? I think it's like throughout New England, there's fault lines, right?
There are the biggest one goes through Connecticut, And I think the town is called Moodus, Connecticut, Moodus.
Yeah.
And you'll hear about them having little tremors all the time.
So as much as we kind of associate earthquakes with California and the West Coast, the big one coming, that kind of thing.
Yeah.
What was it, San Andreas or whatever.
Right.
We've got plenty of potential for vibrations here. And, the risk is if you have a sizable earthquake, it could actually undermine the foundation. It could
Sure.
do
Crack
significant
the
damage.
foundation, move your house off the foundation, shake your house up, and you have tremendous amount of damage to it.
Property damage in that. Yeah.
I look at insurance as in a very simple format in terms of risk management. Retain the losses that you can afford to lose. Take a higher deductible. I carry a $10,000 deductible on my home, so I can handle that. But transfer the risks you don't want to or you can't afford to retain. So if the replacement cost of your house is $1 million, and let's just say it's $150 to buy earthquake insurance, it's like, okay, I'll transfer that to an insurance company. It's not a lot of money. Chances of it happening is very small, but if it does happen, I don't want to be in a position where I'm uninsured on it. So I carry earthquake insurance on my home, and I also carry it on my business.
I hadn't even thought about the business. That's an interesting point. So in the sense of if you own the building of your business, is that what you're referring to?
Yeah. Mm-hmm.
Yeah, good point. When it comes to the house, I guess there's a whole, in the case of the business, just to go back to that, I bet there's a whole bunch of business interruption considerations as well.
Absolutely.
Would that be on that kind of a policy, or would it be, business interruption is maybe sometimes a different kind of policy?
No, if you get earthquake coverage, you'd have it endorsed on to, if you have business interruption, you'd have it endorsed on there. So it'd be a covered peril.
I imagine when a significant damage comes from an earthquake or potentially other types of circumstances, you sometimes get the federal government calling it a disaster zone or whatever.
Natural disaster or something. Yeah.
Yeah. How does that help people who aren't properly insured for these kinds of considerations? Is that going to satisfy? Let's say an earthquake came, we had, that kind of federal decision as to what that's called or whatever. There'd be extra resources that might be available. Is my house going to get fixed by the federal government outlay, or am I going to be on the hook?
Yeah, look, you have something called FEMA, right? And it's the Federal Emergency Management Act. And a lot of times what they'll do is they'll come in and they'll make homeowner loans available on more favorable terms. You're still going to take out a term. They're not going to bail out every homeowner there. Right. And who knows how long that could take. Jeff could speak better about dealing with the government in terms of putting in a request and getting money back from the government. What the time frame is. I would rather deal with a private insurance company and have an insurance adjuster come down. And typically, a lot of times in those emergencies, they're writing checks right there on the spot to give you to get you going on a claim.
Yeah. There might be some aid assistance. Maybe $10,000 so you can find a place to live and have some dry clothes and get some furnishings and some personal items, but they're certainly not going to rebuild your house for you.
Yeah, I just wanted to make that point because you do hear about these kinds of help that can be coming in, but it's not really going to solve the problem. You really need to plan for these issues yourself.
There's a statistic out there that says in the United States, there are about 5,000 earthquakes that can be felt each year.
Wow.
And so it's there, it's an exposure. And I just, from my perspective, I want people to be aware of it. And if you want to retain that risk, and that's fine. You're aware of it. It's like, okay, I'm not going to buy earthquake insurance, but at least be aware of it and understand it's not covered on a standard homeowner's policy.
I think that's like the best advice that anyone can get from this interview, is that so many people just, when they buy a new home, when they buy a car or a boat, whatever the case may be, their number one goal is to get insurance, and they're in such a rush to check the box that they don't do that careful analysis. And then on renewal, it's just something that comes up for renewal and they just check the box, and you don't find out that you're not adequately covered until, sadly, it's too late many times.
That's why I mentioned about the watercraft policy. It's like, tell your agent, I want replacement costs.
Right.
Should I have partial damage to my vessel? If I hit a rock, I want them to replace it, not give me something on a depreciated value.
We've talked a little bit about some of these different issues, but we mentioned that it's even currently hurricane season. I think it's always helpful to remind people about some of the different ways that wind deductibles work, and the way coverage works, when it kicks in and when it doesn't.
Sure.
You mind walking us through that a little bit?
No. So you're seeing, let me just say right now, a lot of people are experiencing increases on their homeowners insurance. And if you own a business, your property insurance. United States, it's not just the United States, but you could say across many parts of the world, the reinsurance marketplace, and reinsurance is the insurance that is provided to insurance companies. Insurance companies do not always retain 100% of their risk. So if they insure your home, there's a good chance a portion of that risk is reinsured with another insurance company. And we use the term reinsurance. And those companies, a lot of times, are located in Switzerland or Germany or Tokyo, Korea. They're around the world. And so it's a global phenomenon. So what's going on right now is that the reinsurance marketplace, particularly, there's been, in the last 3 years, 9 catastrophic events. Each one of those were over $10 billion in claims. And so the reinsurance marketplace has lost their shirts, and they're raising rates. So a lot of people are seeing that homeowner prices are going up. The cost to repair homes are going up. And the same thing, the cost to repair vehicles are going up. And you're seeing across the country rates increasing on both home and auto. And so when you talk about deductibles in a homeowner policy as it pertains to wind, the reinsurance companies have made it expensive for the insurers. And so insurers have put on 1%, 2%, 3%, 5%, sometimes 5% windstorm deductibles. And the reason they do that is they're looking to share the cost of those claims with both the policy holder and the insurance company to help reduce their reinsurance costs. So there are 3 deductibles that you'll see. A windstorm is just a general windstorm. A lot of times you'll see it on a policy that it'll say wind, hail deductible. And this applies to damage from a hurricane or tornado or any type of strong wind. It's just a general deductible for anything related to wind. And I would say that's the least favorable type of deductible to have on your policy. The next one up the line is what they call a named storm deductible. And this type of deductible typically goes into effect if your home is damaged in a storm that's been named by the National Weather Service or the National Hurricane Center. So as an example, a tornado or other strong windstorm, that would not trigger this type of a deductible. You might remember a few years ago, they had pictures of a tornado that formed on Cape Cod. If that happened to be a stronger tornado and land on someone's house, there would be no deductible if they had a named storm deductible. So that's better than a windstorm. And then of the third deductible that you'll see out there is just a hurricane deductible, which means it needs to be a hurricane, needs to be a named hurricane. And if it's a named hurricane, then that would kick into place that deductible. So starts off windstorm, the next one up is named storm, the next one up is hurricane. So you can ask your agent, what kind of deductible do I have for wind, and see if they can give you a hurricane deductible if you must have some sort of a wind deductible. And most homeowners on Cape Cod have some sort of a wind deductible.
Doug, I'm really glad you elaborated on that, and particularly the way you started that with the explanation about reinsurance. That's one of the things that's often been a concern of mine, is that, if there's a local regional insurance company that's heavily exposed in our area, having underwritten lots of the properties in our area, do I have to worry that if I'm insured with them, that they're going to go out of business if we get a storm here? And I take it from your explanation of reinsurance that kind of a circumstance is very likely going to heavily participate in a reinsurance where they won't retain all that risk if they're very concentrated in their portfolio of risk. Is that accurate?
Yeah, the insurance industry has a better track record of maintaining solvency than the banking industry in the United States.
That's pretty impressive. Yeah.
And part of the reason for that is they have to be a lot more conservative. They don't have the federal government that's going to come in there and bail them out like you see they have just recently done over in the bank in San Francisco.
Silicon Valley Bank and so forth. Yeah.
Yeah. So they tend to be far more conservative. They spread their risks more. So they are regulated by the Division of Insurance in each state. So we have 50 states. They each have their own Division of Insurance, and they regulate them. And they have a requirement for them to carry a certain amount of surplus. Surplus means money that they put aside to pay claims. It's extra money, and they refer to that as surplus. They also are required to carry a certain rating. And so you'll sometimes hear the term, their AM Best rating. AM Best is a rating agency. It's not the only one. It's one rating agency. But in order to maintain that A rating or A plus rating, they need to have a certain amount of money in surplus. They also need to make sure that a certain amount of their money is, their exposures are reinsured. And so there's a lot that goes behind the scenes to make sure that they can maintain their claim paying ability. And they do spread their risk. And I'll point out something. In 2008, some of you may be aware of an insurance company called AIG, American International Group. Sure. It was a AAA rated company, really solid, and it got taken down by its financial investments that it made on its other side. This is an enormous organization, but they invested into derivatives, and so their financial investment side of the house was insolvent. But interesting enough, their property and casualty division was not. And the Attorney General for New York wanted them to release some of their surplus to help bail them out, and they wouldn't do that. So they had money sitting in accounts, but they couldn't gain access to it because that money was designated specifically for property and casualty claims and not to bail out their financial division.
Yeah, with the derivatives. Yeah, interesting. Good point. So it's a high priority, and it is important to remember that each state does have a system in place, a pool that they try to help if a company does go down, so that insureds will be made whole.
And if I could take one step further on that, Chris, in Massachusetts, they do have a guarantee solvency fund in Massachusetts. So should your company be insolvent, and it's a primary insurer in Massachusetts, they would cover you up to $300,000. And then after that, they also make a requirement typically for a homeowner company, if it will become insolvent, that other insurance companies in Massachusetts would have to step up and take over. They normally find somebody to take over their
Yeah,
portfolio.
typically that's how it's resolved, right? That another insurer will say, all right, we'll take that on with those reserves and whatever, and
Right.
sort of make everybody whole. But when there comes to, so this applies to other types of products and services as well. When it comes to insurance, there's, life insurance carriers and so forth, but a little bit different risks and different limits and all that can apply. But hey, Doug, it's always a lesson when you come on. We get learn so much. Thanks for being with us. I want to remind everyone, if you're listening and thinking, hey, maybe I'd benefit from a review of my policies, or do I have the right kind of replacement costs or coverages that all these different kind of things we talked about, you can reach out to Doug and his team at riskadvice.com. Is that right, Doug? Riskadvice.com.
Yeah.
And you can get all the help you need from Murray MacDonald Insurance Services. So we love having you on, Doug. Hope you'll be back soon.
Chris, thank you for having me on. I'd be glad to be back anytime.
You're listening to Something More with Chris Boyd, Financial Talk Show.
Asset Management Resources, LLC, and J. Christopher Boyd, CFP, provide investment advice on an individual basis to clients only. Proper advice depends on a complete analysis of all facts and circumstances. The information given on this program is in the nature of general financial comments and cannot be relied upon as pertaining to your specific situation. AMR, LLC cannot guarantee that using the information from this show will generate profits or ensure freedom from loss. Listeners should consult their own financial advisors or conduct their own due diligence before making any financial decisions.